There's a look at the TSX. It ended at a record high close today. It drifted down, as you might expect, after a fresh set of trade salvos from US President Donald Trump. Let's get more from Som Seif, founder and president of Purpose Investments. Som, thanks very much. Give us your overall feeling. Is there exuberance in the markets right now? Is there a feeling that things are toppy? I know that's a very hard question to answer.
Well, I mean, first off, great to see Andrew, and I will say that the markets are robust, and broadly, if you look at where we were a couple of months ago when we were hitting sort of 20% down off highs and such, it seems really crazy to see us move so quickly upwards, and of course one of the fastest moves up from a low like we've seen. So for investors, the obvious question is this gotten too fast, too hot? I think largely, if you look at the backdrop, the markets do look pretty expensive in terms of breadth, but if you look at the reasoning, you've got lots of reasons why the markets are excited. You've got, of course, the continued spending by government, specifically the recent bill in the United States getting passed in the last couple of weeks, and that in itself is a huge amount of capital that's going to be ultimately driving into the markets. Continued tax cuts, things like that. And then two is you've got the issues around the interest rates in the Fed direction, and of course the Fed has been generally pretty viewing that interest rates would come down if there was more clarity on tariffs. But on top of that, you've had the little bit of a view that maybe there's going to be a new Fed governor coming in who would be more dovish, and so the markets are making some assumptions around that. Those things are ultimately the backdrop that's driving it. On top of that, of course, the final thing is that seeing significant kind of call it positive messaging around AI, productivity, R&D investments in that area that are just generally driving the capital markets to be pretty excited right now, and so. Yes, it's a big fast move, but for the most part, there's some reasoning why the markets are thinking this way.
The market is a little narrow, though, for your liking, though. You're being led higher by a few darlings, especially south of the border.
Yeah, look, I mean, at the end of the day, technology continues to be a big driver of the markets, like it has been in the last little while. We've gotten even more concentrated in the last year or year to date than we were at the beginning of the year, which, never gives you, or should give us all a little bit of pause. At the end of the day, there's reasoning for that. These companies are growing fast. They're making massive investments in AI, which is a new platform of technology that's going to be transformational for all industries. And so they are seen to be the winners, especially at a time when there's uncertainty of where to allocate capital elsewhere. What is really important is that you saw, of course, at the beginning of this year, a significant amount of capital being, reinvested internationally outside of the United States. And for the most part, that, has somewhat slowed and the money has kind of been reversing back into the United States. So that's kind of the more interesting thing is that for them, I continue to believe that international markets represent really exciting places. Those economies have been, waking up post the, call it changes in the administration in the U.S., pushing for, kind of protectionism and such. And so these economies around the world are actually waking up and seeing that they need to start to make the necessary investments, change their trade structures. So I actually think that global markets are actually very attractive right now. But we've seen a little bit of a change in tone where money is going back into the United States at a time when, we saw that change from the beginning of the year.
It's early days for AI. It's so strange to think we're really just in the Neolithic era when we come to this stuff, but it is truly amazing what's already arrived. Companies exposed to AI, you say, are seeing just an explosion in sales per employee?
Yeah, look, I mean, the data is really interesting. I mean, right now, every company is going to go out there and talk about the fact that they're using AI, they're adopting it. I think the percentages are pretty high in terms of every company talking about it. The question is actually, what are they doing that's leading to real productivity and profitability gains? And that, I think, is on the light side. There's sort of two buckets. First is huge R&D investments. And, when you look at the kinds of things that, Meta has been kind of talking about recently about spending, call it NBA-like dollars on individuals to kind of attract them, there's real reason for that because they sort of see the eye on the prize of this massive win if you get it right. So that's happening broadly. And of course, the capital allocation that these major companies are making. But on top of that is broadly the industries all around, the world are saying, okay, now how can we use this technology? My honest view is that I think it's a little bit too early. I think this is, everyone's talking about it. They're all trying to say and put their notch that they actually are making making the necessary investments, but I actually think that you'll see a little bit of time before you see real productivity gains, real economic profitability, kind of value add from AI in businesses, mainly because most of these businesses are still trying to catch up on the cloud movement. They still haven't got their data organized. And so, getting the transformational movement towards AI is still going to be a huge challenge because they still have to get their data organized right. And I think that you can't really get real gains in AI without the data organized in the proper way.
Som, we've less than a minute. Next week, anything in particular, or over the next couple of weeks, anything in particular you're looking out for?
Well, continued. The recent call it onslaught of tariff aggressiveness. I think since the U.S. administration got this bill passed, one of the key line items is to get tariff revenue coming in to offset some of the costs and spending. So of course they're being much more aggressive in the last week or two on trying to drive, call it tariff negotiations and trade negotiations. So I think you're going to see a lot of aggressiveness to that. That could cause bond volatility. It could cause equity volatility as the sort of markets figure itself out between now and sort of August, mid-August.